we can offer investors much better yields than what they're getting for. So investors are chasing yield. That's what you need to understand. We're going to talk about brokering notes, but I'm also going to parallel that with originating notes. All right. Step one, we need to connect with note professionals and build your dream network. Now, I'm going to make a request. I would like to be your only note buyer, if that's okay with you, because we want to buy a lot of notes. But for us to buy them, you've got to bring us the type of inventory that we are looking for. Now, let me be a little more bold and say it this way. If I'm not interested in buying it, you're probably going to struggle to find anybody else who's interested in buying it, because the market is shrinking about what investors are willing to pay for. So now more than ever, you guys have got to follow our established outline and guidelines for how deals are structured and the types of properties that deals are structured on. Okay. Number two, we're going to unearth some hidden gems and sources for fantastic notes. Next to this one, I want you to write real estate agents being number one. Your number one source are going to be real estate agents who have listings that are sitting on market longer than 90 days. Okay? Any realtor who's got a listing that's been there 90 days or longer is looking for anybody that can come to them with a fresh idea, a fresh perspective to how they can get this house sold for their client and get them cash and get them paid. Okay, number three, the unlocking the secrets of the note by valuing and assessing it like a pro, mastering the art of marketing, sales, and deal closings, and then elevating your expertise and unleashing your full potential in note brokering. Now, in the United States, mortgage notes are freely traded on a multi-billion-dollar secondary market. That's true. Whether the market is hot, market is slow, doesn't matter. Billions of dollars in privately held finance paper is constantly changing hands. I mean, we'll sell $5 million worth of notes in a week within the marketplace. Just people buying and trading and leveraging. And that's just a drop in the bucket of what's happening nationwide and even globally. Here's why. Anyone can buy and sell mortgage notes without restriction. No licensing required to buy and sell mortgage notes. Small mom and pop investors using their 401ks or their self-directed IRAs, up to huge institutional investors, insurance companies, even hedge funds, all looking for a piece of the note pie. What are they chasing? Please write this down. They are chasing yield. Now, it used to be, if you go back 24 months ago, the banking Fed rate was at like 0. And so if you were to put your money in a CD, you were lucky if you got maybe 0.5% for locking up your money for a year. Now you guys are seeing all kinds of bank advertisements where they're offering 5.3% to open up a new account at a bank and put $100,000 in a CD. Now make sure you read the fine print, because that 5.03% is usually only for the first $5,000 to $10,000, and then the rest they're offering you 0.5%. But that 5.3% is what's important, because this is what's being burned into the investor's mind. So investors are thinking, you want me to buy your note at a 5% yield when I can go down to the bank with 0 risk and get a CD at 5%? The way that you get my money deployed is you offer me 10, 15, 20% yield on capital, or I'm not writing checks, okay? Which means we not only have to negotiate better deals, but we have to structure better deals where we can offer investors much better yields than what they're getting for. So investors are chasing yield. That's what you need to understand.